Hello everyone, this is Arman. Welcome to this week's forecast video. Before we begin, please note that trading Forex and CFDs involves a high level of risk and may not be suitable for all investors. The analysis and opinions shared in this video are for educational purposes only and do not constitute financial advice. Past performance is not indicative of future results. Always manage your trade carefully and responsibly. So first, let's start with the fundamental news events that are yet to be released this week, and let's see how it might impact the market. Actually, Tuesday today brings a notable US release, consumer confidence, an important early month sentiment indicator that gauges how households feel about spending and economic conditions. Consumer confidence can influence USD pairs and equity sentiment when expectations shift. In addition to economic data, markets will also watch for evolving central bank and geopolitical headlines, including global trade discussion like the India-Euro strategic agenda at the Jan 27th summit, which could impact broader risk sentiment. Actually, Wednesday is the highlight day of the week. FOMC policy decision is expected to be released on Wednesday. The Fed is widely expected to hold interest rates unchanged in this meeting, though markets will pay close attention to Fed chairperson Powell's comments for future guidance. This decision and the accompanying press conference can create strong volatility in USD bond yields and equity markets, especially if the forward guidance signals further rate moves or policy shifts. Thursday, actually, Thursday looks very lighter, based on the major headline data, but traders will still monitor delayed macro releases and sector-specific reports such as weekly jobless claims and trade data that can influence near-term sentiment. Most high-impact headlines are always concentrated earlier in this week. Friday wraps up the week with important inflation and production data. Producer price index and the core producer price index expected to be released this week. Actually, this looks at wholesale inflation pressures ahead of consumer inflation metrics. A stronger or a weaker PPI can shift expectations for future Fed policy and credit market pricing. These price trends are vital for traders positioning in forex pairs, commodities, and fixed income markets heading into the next month, especially if they diverge from the expectations. So these are the news events that are expected to be released this week. Now let's take a look at the technical forecast of silver. Actually, silver on the daily chart, the bullish run still continues, and it looks like the bulls are unstoppable at the moment. So the price action shows a strong bullish momentum, and also the MACD indicator still supports this bullish momentum by creating higher highs. As you can see, the price has created higher highs on the chart, and the MACD indicator has also supported this by creating higher highs. So my bullish view still remains the same on the daily chart. On the H4 chart, too, the price supports this bullish view. As you can see, the price has created higher highs, and the MACD indicator supports on the H4 time frame too by creating higher highs. So the bulls are definitely on the run here. So now let's move on to the H1 chart. On the H1 chart, we have a strong bullish momentum, as you can see. And currently, it looks like a correction is happening. So basically, I expect correction towards the marked support zones here. And I expect the price to respect these zones and potentially move higher further. So my short-term view on silver is bullish. And my plan is to buy retraces. So now let's move on to the next instrument, which is GBPNZD. So on the weekly chart, we have a bearish divergence that has formed. As you can see, the price has created higher highs, whereas the MACD indicator has created lower highs. So, which is a sign favoring the bears. So based on this, I expect the bears to be in control here, at least in the very short term. Moving down to the daily chart, we could see that the price has created a bearish divergence here as well. As you can see, the price has created higher highs, whereas the MACD indicator has created lower highs. And in addition to this, the price has moved lower and has broken below the most recent uptrend line. So these are the evidences that supports this short-term bearish view. Now, moving down to the H4 chart, actually, we have a strong bearish momentum here, and currently it looks like a pullback is happening. And also, we could see that the price is broken below a strong support zone and is holding below it. This support zone is acting as a resistance zone, and currently it looks like the prices are retesting this zone. So, my plan here is to sell the rallies until both the strong resistance zones that I have marked in yellow holds. My plan is to sell the rallies here, and I expect the bears to continue further in the short term. So hope you find this forecast video helpful, and I thank you for watching this video, and I wish you a wonderful trading week ahead. Until I see you in the next video, it's Arvind Akash signing off. Bye. Cheers.